Good morning. It's Tuesday, the 20th of August. We see now the cash open. Hyper 1 was played already in the pre-market. Prices pulled back to this bull control level where you see people trying to get back into the long side. Then they got stopped out. Prices pushed lower. And for that they reach and now this initial range yesterday value high cluster. And remember, from my hypo number one, this is then our range long levels, the yesterday value area high, the lower volume edge of the pre-market, so everything around here 25 and the 20 24 25 area here. We see that here is the volume edge, so we're right now in a possible range market. That means we look in scenario number one for range long, or if you want for the range short at this area. We look for initiative, no, we look for responsive selling or responsive buying. Another play, if they initiate selling is at the low here, then we look for a holding. If there's no rejection, we stay in this trade. If there's no rejection by buy side, we stay in this trade. And no, they first need to get into then the overnight low, and then have the opportunity that we see the 10, 7, 4 area here. But this is our possibilities we have. Right now we see that we're in this range. Remember, responsive selling if you're looking for the range long, responsive buying if you're looking for the range short, and responsive buying here if you're looking for the range long. Initiating buyers at this level would mean we can look here for the long, but at the upside, this profile here, this maybe got filled out to make a normal distribution. So if they staying more bullish today, they may fill out here this profile where we have from this 2 days a lower volume node. And so we will see what happens. The targets here is not so easy then, because we have a lower volume node at the 44. They may already reverse at this level and going back to short. We have also a chance to get to this minor PSC around here at the 53 level. So as we are in a correction market, it is possible that they then go to find some re-entering levels also for the sell. So don't be too excited for your targets. Take at the long side, take at this low volume node or at the minor PSC levels, take your profits. Okay, right now we're at this higher volume edge and we already see responsive selling appearing here at the level 36, 37. 38 and 40 will be the edge where I will look then for responsive selling, because this is where I get my best risk reward. All right. All right, we see initiative buyers. All right, so we want to see now here with this, now we're through. We're at this low volume now. I want to see some kind of a pullback, at least some candle where they take some profit. And what I not want to see is that this is going with a high selling rejection. If it's just a pulling back and is a small red candle, or we see absorption even, this is our buyer control level. So this is where we, in best case, let the prices, want to see that prices stay at least above the 39 level. So if you're entering right now here, this is maybe a little bit expensive, all right? I always let it a little bit pulling back and see how they behave as they pull back, because this is when I can make an observation. Everything else is just pure speculation. If you're trading more contracts and it's made okay, you go in then with some kind of first in. So let's see here. See, this is now the pullback. We're watching the volume. We're watching how they behave. Okay, you see pushing, pushing, pushing. Now that's interesting. Now we see they push lower, but does it have effect on the price? Right now, not. Okay, right. You see no effect here to the price. That means here they push lower, then again lower, lower. But at this moment, the second try when they push lower, it had no effect to the price. So right now, we see they starting a little bit to absorb at this area. So that's okay. That's just a little edge we have. We know this is the low volume node. We know we need some power to get through. So this level here is then interesting. And you know, we let them act till the 39 area, even 38. So my stop will be then here at the 38. Okay, you see now, again, they pushed. Prices was not taken lower than the 42. It is everything okay within 39 to 42. We also see now some sellers coming back. So that's what I'm looking for. That's an advantage I can take when reading tape and reading the market. If it then still not working out, that's okay. Sometimes then you got paid, sometimes it's paid out, it works for you, and sometimes not. But you can at least avoid taking too much lousy trend plays if you just go in without reading any signs in the market. So you see, we saw again, we pull back, more pulling back, then price now reacted. Delta divergence means more selling, but prices already showed us no reaction, means absorption. Now this is the second try. We now saw buyers coming back in, and now they're trying actively buying market into the high of the day. What we want to see is now we stay in this trade as long as we don't see that at the high area here, immediately rejection is coming. If there is a really strong, intense rejection is coming, I'm not gonna let this drive back into my 39, 38, 39 area, because then I'm gonna leave before. But as long as I see that they keep on holding and just pulling back a little bit, that means they don't have to take out the high immediately now. We can also may see some rangy before building some accumulation area. So this is not the reason. Then I leave my stop at this B8 level, okay? Then I leave my stop here at this 38, 39 area. That's very important. Right now, we watch and take some time to also be aware of our emotions, thoughts, and physical sensations. How clear are you at the moment? Tell me. Or write down. Okay, you see, this is not over yet. They're selling, selling. What we want to see now here is that they stay in control. That means That means that they stay in control, absorbing this area here, this control level here from the 40, 41. And what we now want to see is that they push the pieces out into and go below the 39 area here. Then this would be the moment where I would then look to get into the reverse. That means going back and say they avoid getting higher. But right now you see absorption. See this here? Please look here at delta. You see selling, 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 but low is not taken out, right? And see this spike here? See this? Woof, buyers coming in. See it in tape. And they reach the 42 level, 41 at 9 o'clock, 12 and 23 seconds, 224 people got in again. So now we're at the high. This is now our third attempt at the high. So it means now you can get a little bit more confident with your stop. Our target area around is here at the, I would say the 50 is now a clear LVN, and the POC here, if they can get into the smaller, where everything started yesterday from the short side, when they took out the overnight low. So this is definitely also area here at the 53 around. But right now, for me here, the 50, this LVN, this should be tested here. All right. My stop is now definitely here at the 40. That means I pull it at least to 40. Don't want to see that they now take it back. If they even push it now higher and take out the high 48 on the way to my first target, you see they absorb even. That means the people that sell here got absorbed, and a little bit buying power is enough to take them up to this area. So now we took it out. I now pull my stop to my entry level, which was 43, and my T1 target, my first target here, is at the 50. I want to see them testing this low volume now here from the from this profile here. What is it? Composite profile? Yes. So this is my first target, and they traded one contract into it. All right, anyway. So they may pulling a little bit back now. My entry level here is where my stops is then here around, because I want to see them testing at least here, this level. All right, they push. It means you see they absorb. Now some buyers coming back here. See this here? They pushed. We didn't fall yet below the 46 level. What we need to see, of course, is that they buy in it again, at least to the high here. So it is a little bit weak already. It is a little bit weak. So you see this the difference when you have something in the way on the upside, which you don't have in a super bullish market where you're starting and have no distribution at the upside. Here we do have, of course, some distribution at the upside, because we're in a shortish market and trading now against this yesterday and today's trend. So I'll be more careful now. I want to see them now taking on at least a 49, my target area 49.50, and if they cannot do it, I will not let it run into my entry again, because you see this in delta. This is then a sign that this is really weak then here, and we don't want to see this weakness here. But right now they absorb and stay in control. Think of it, your trade is paid. I mean, it's not paid, at least it cannot be a loser anymore. And we think of this situation here, they staying and absorbing. All right, we see now there's liquidity provided at the 50. So at the 50, there's liquidity in the ask. That means we have some blocking here in the ask. And the people react to this. You see this, that more sellers now try to get into it because some maybe are having fear that they will not go up to the high again. And still, delta is on our side. That means I'm staying in this trade because you see the absorption hold it on, then it was even weaker in selling, taking profits, and then even more buyers coming in. That means delta is still on my side, and I don't want to see that they take out this microstructure here. So that means that I would then leave my trade here. I'm at the 43 with my stop right now, and that's okay. I stay here and either got then stopped out at my entry or +1, or got filled here with my 49. This is the level before the 50. So because this is still this area in the composite and the yesterday profile where we see may they even test this 50 and go up here 49, 50 and test this higher distribution. So this was the sell control level from yesterday. Remember, this was the selling control level. Now it's again, they stay in control, and it's yeah. Buyers are still here, and the sellers, remember, even tape is a little bit reddish here at the top area. They still absorb here this level at 46, 47 area. I'm in the same situation as you. Can't do nothing right now. Just need to wait and see. Read the market, see what is on your side, see the tape. Now switching a band to more greenish the tape. That means people are going back more into buying. 297, some is more confident now at the top area. 48, 29, 107, 40, 47, 37, 39 selling got absorbed. 48 buyers coming back. 191 buying. So I'm got filled here at the top area. Means position number one, you can secure now your position number one here, 49, 48 area. I did so. That means this is my target. One is reached. Now we stay. You stay with a second contract. You please stay in it. You see where I got in. Because look at the 15 minutes here. Where we at? We now took on to the 50. That means we took out the smaller low volume node. Now we have at least the 53 to the 56 area. That means this will be the breakout level, and you see the small distribution here. That means at least 53. And then we watch carefully if they reject. If they reject hard at the 53, that means what we already see started here in selling. If they trying to control again the yesterday sell level here, see this here from the overnight low where they pushed into it. You remember where we yesterday also looked here for the shorts starting from the 60 area and from the 50. That's where we are. So that means we want to see increasing buy volume, bullish strength. Now we reached the 53, so be careful. This is this minor PC at the level where they pulled back yesterday here. See this pulling back, and then boom, got into the trades. That means wonderful would be if the bulls stay comfortable and stay confident, and we see in delta then that they go on buying. All right, this would be wonderful, but we're not gonna stay against then the bears if they coming in again and pushing really hard, because we already see some taking profits and selling behaviors in this situation starting here at this low volume node. You see us here in delta. So I will tell you my opinion and from my observations. We can stay with a second contract in this trade, and right now we wait. Right now they absorb again. Okay? Right now they absorb again. That means people who sold here got absorbed. Now they're able to push a little bit lower, but you also see that here's some buyers coming back. So be careful now. We want to see now how this absorption is going on. Okay, right now they push it, they push it, they push it. I will put my stop now below this entry level to the VWAP area here around the 44. That means if you're in a second position now, you entered maybe around my 43 area as I did, as I told you when I see this absorption signs, and I entered here then up to see the absorption and buyers coming back. So what we not want to see is that they take out this higher distribution here. All right? That means you can stay comfortable within the 42, 43 area. And if you don't get paid, then remember you got paid with your first position around here. And your second, you wait. They reached the minimum T2. This is the 53. This was this POC, but they couldn't take out and didn't take out the breakout level. So they were at 54. Yeah, it was tightly. Yeah, almost reaching this area here for the distribution edge here at the 56, 57. But give it a chance. I would now wait what they do. If they pulling back and boom, we see shorts coming in again, then you can even take out your position and secure your profit. But have a look at the delta and then you can see how they react now. Okay, I would leave this position now if they take out the low here, if they take out the 46, because we see sellers coming in again at the low. Sellers coming in again at the low, that means trying to play here the bulls level. So don't let the 46 area is taken out if you're only trading here 2 contracts, because wouldn't make sense as we are so close to our target here, 54, 56. So we almost reach it. So this is really now, they need to absorb and stay in control here. I would not let it go below this 40, 46, 45 level. If you only have 2. If you have 3 contracts and you've already secured your second position around the top area here, you can stay as a home run trade. Then you can put your stop here to the 42, 43 level, or even to the 40. Then you may lose some ticks with the third, but you're still in a position and able you can let them then test this initiative buy level here, which you see in Delta started obviously here once they push below the initial balance range high. So it depends on. If you have 2 contracts again, I would now secure if they take out the 46, or if you not have already secured your second position here at the top, or if you have 3 contracts and you have already positioned here or about to secure your second position here below the 46, I would stay with the second and also then with the third, because the third we want to really see then taken out and testing the whole volume edge going through. That means going at least to the 56, 57 level. All right. This is what we want to see. So let's wait.
All right, now think of your stop handling. You're seeing that they coming in again and trying to find acceptance and say, okay, if this is too cheap, I provide the market with the information that the value we have now, this is still too cheap. We need then, of course, a holding on and get with volume through this area. When you see that already at the top, when testing the top, now be careful now. Be careful now. They're reacting now. Liquidity provided in the ask 670, 700, almost 700. Contract is 51. So be careful now. The second attempt got blocked, led to increasing ask volume. That means if they're really serious in buying, they need to take out this level 51. Look how they react. Look how they react. Take out your position 2. Take out your position 2. Okay, number 3 you can let in the number 3 because you're paid with number 1 and number 2 now. You made some good profits, and your position number 3 you can let it in the books. That's okay. We still have a chance that this is just only a quick rejection, and only buyers may take this opportunity to show, hey, we still in control. I'm still want to get higher. This is still too cheap here, the prices, but have you seen how they reacted? As I already have seen 10 to 15 seconds before that the ask liquidity was shown up here at the 51. Did you see them? Boom. How they react. So this is definitely a good way to say then, okay, I take out my second position, because you need, of course, to secure at one given moment your profits. When they cannot take out some important level and cannot build strength again. So this is very important to say then, what is then a statistical advantage I can use to read order book and order flow and the reactions based on auction theory and volume profile to secure then profits. Where is it still possible to let me stay in the game, because I have a chance of making still a good winner? And where is it wiser to secure the profits without getting out too early, because maybe got controlled by your emotions that tell you, oh, my P&L, I can. No, this is something different. You see, I try to react based on what I see and say, okay, now we have a little higher advantage, as we see this here, that we now going back to our initiative buy area, at least to the 41, then 42. That doesn't mean that has have to happen, but it's just the advantage now more on the sell side when you see some kind of rejection here. And you see still having problems. Your third position, why then hold on to your third? Yeah, because we have nothing to lose. If you enter like me at the 43 level and you have a third position who is prepared for the possible home run, think of it. If we can reach the 57, this would give you another 13, 14 ticks profit. And tell me now, from the statistical standpoint, why would someone leave the opportunity for 13 or 14 ticks without risking any cent? You understand? That's the difference. And if you're thinking by P&L, judging your trading by P&L and thinking, but I could take out now, I'm still having 5 ticks and then it's only 0. This is bullshit. Then you leave the statistical stage. You leave the statistical stage that will provide you the money you need to make in trading for consistent profitable trading. So that would be bullshit. But if you're going into this P&L thinking, profit loss thinking, you may say, okay, look, I'm at 50. I entered at 47. Oh, if I now secure this third contract, this would be 7. I don't want to have a good feeling as it coming back to the low. Then I only make 1 or 0. So this is bullshit, because why are you in this trade? Why have you risked this money? Because you want to reach T1, target 1. You reached almost around the target 2. You secured it then, as you see, they pushed it out. And now you have the chance for a 13, 14 tick to this top area where the upper distribution is from yesterday, where this upper smaller low volume node is from yesterday to this 50, 56, 56, 57 area. So this is why you stay in this trade. And it's right if you think that this is probable only a 20-30% chance now that we're reaching the 56, 57. But tell me again, if you make a bet with some other people and you're lucky because they say it for this last bet, this will cost you no money, or it's some first bet ever for this company and it's for free. The first bet is for free. So think of it. If you have a chance, you can choose out of 3 numbers. And if you choose the right number, then you win, let's say 140 euros here with the Bund. And the price is 0 because the last bet is for free. Tell me, what you do is when you have a 30% chance of hitting the right number out of 3 numbers, or imagine there are 3 glasses and beneath one glass there is a 3 cups, and beneath one cup there is a table tennis ball or something, and you can choose, and this bet, the first bet is for free. It's a 33% chance. Wouldn't you do this? Yeah, of course you would. Of course you would. So even the chance after seeing this rejection here by sellers, you're seeing that they're really hard here and rejecting them. Maybe let's say this is only a 30% chance now that they're reaching the 57. Okay? And the higher chance of 60 more percent is that they're falling back. Why wouldn't you stay on this 3rd position when you entered so cheap? If you have an answer, please write it to me. Write me a direct message or whatever, but I would be curious. We do see some selling, but we also see absorption right now. My stop would be still below this level here. below the 40, 45. I would give it still the chance, because no matter what, as this is the initiative selling area from yesterday, remember where all the shorts started, where we pulled back and started with the breakout level, where the distribution from the breakout took place. You see how strong still the buyers are. Nobody knows if the buyers win or the sellers. As long as the majority thinks, okay, this is still cheap price, and I want to go back to this higher value, this divided by this low volume node here at the 57, 59 area, before getting into this higher area again. As long as they do think so, we cannot do anything. We don't know who wins, but as long as we see absorption and buyers don't give it up, you go with the market. Because it's those big guys who take you on your shoulder, and only those guys are able to carry you for more than 1 or 2 or 3 ticks, or for range trading. This is the other time frame traders, the big players. Those guys have the ability and the size to push market to higher areas. All right, wonderful. They now took on, at first time, take out this now a high from 922 to this 20 minutes high was here for 20 minutes, not taken out. They take it out now. Now we see if there's coming some buyers in again, and now we already almost hit our area here from the yesterday overnight low, the area where we hit the target, so 56, 57. And this is then where I would take on my profit, because then we already made some good streak here for a correction, shortish correction market, and this is a very good sign then. So people still buying here at the top. Also some sellers got absorbed, so they still now trying to stay in control, take out and stay above this initiative selling bear control level, from yesterday. So watch a delta, looks how the selling has effect on price or not. Look if this is not affected if the selling doesn't affect the price, means we see another absorption. If selling affects the price and price push it lower, then you see that they may say, okay, now we are fair priced and find some distribution now within this area. So this is possible. Then you can think of securing then your profits as the target area you see here is almost reached with 56. But as long as they can stay here in control, we stay within this trade, because we want to see first, give it a chance to see another absorption and buying coming back here. Right now they did, that means they sold into, but also people get into some positions again. If this ends and they push it again, I would say that you can secure your position if they cannot pull back at the VWAP. So give it at least a chance to the 46 your stop. Put it at least, give it a chance. It's only your third position. Remember, this is the lowest price. Don't judge by P&L. This is the lowest price you can have for this bet to the upside. This is the lowest price. Again, remember, you're paid with number 1 contract, number 2. You reach target 1, you reach target 2. Either here, or here. Now you're waiting for your third. For me, this is around this volume edge at the 57. If they hit 57, then you may got filled. They stay in control. Remember, number 3 contract, this is your home run. This is the cheapest position you can have for this bet to the long side. That's the way you need to think. And don't blame yourself if you have feeling some pain because you have not secured your third position yet, because you may judge your old behavior patterns. It may feel like getting back and got stopped out at 0 means, oh, you lost this profit, this possible profit. That's totally okay. Don't judge your heart on yourself. Don't do much too harsh self-critics. Just find acceptance. Say that's totally okay. That's my old behavior patterns, and now I'm looking with this kind of thinking I'm trying to teach you is the way to create them new behavior patterns. To get the feeling here of success as well. The feeling of success, how it feels like to stay in a clear mind and see how this plays out for you. And you see delta is on your side. Initiative buyers going on here at the top area, as they did here, as they pushed here and took out the high. Now still the same thing. Now they even provide liquidity here in the downside. That means 49, 48, 46, 48, 46. They still want to stay in this game. They still now want to take out and stay above the yesterday bear control level. They still initiative buying. Do you see this? Do you see the difference in delta? I hope you do. This will make you become more skilled technically when you watch and learn your way, your technique to spot the difference between responsive and initiative. Thinking of like measuring success and failure of volume. We see then even that the volume is here created now. It's not so many here at the 52. That's okay. That means value have not shifted yet to the upside. POC didn't follow, but at least there is some good. There's some good value already in the game and is played here. So that means they still playing this level. They still, when they pulling back, we see pulling back, and we see then absorption, and we see re-enter with initiative, with responsive on this side, and then initiative buying we see here at the top level. So they need just to take out the 56 and then you're free. You can have now your limit here at 57. When you got filled at the 57, either you got filled here at the 57, then you secure your third and last position. And if not, so what? Then now we know we have seen a second attempt with a lot of money is in the books here. A lot of money, long positions in the books, a lot of risk in the books. So now you can consider if they cannot take it out, pulling back and even take out this liquidity area, which is right now at a 48. I would be totally okay if you then have your stop here at the 47 level. Then you say, okay, they have failed. They won once and second. And now we hit the 57. We need to see that they buy a little bit more into this level so that you get filled. And let's see. Congratulations. You kept on 59 contracts already here. Got additionally sold. 280 contracts got bought into. That means 280 contracts got bought and 200 possibility shorts or longs got secured. You should be now out of the position. That means we now hit this lower volume node. We hit the +1. That means the initial balance range high extension by double, means by the same side, the same duration. And yeah, congratulations. Now you see, again, how your mind have worked. Maybe you're a professional trader already and say, what I'm talking about. No, and you say, okay, may you say then, very good what he said, because you may be at level 2 of your trading and don't have this mindset problems anymore. Then you just achieved your goal. But if you're not and you're still on the way to find and to get in control and in a clear mindset, then I hope that it was good the way I told you how to prevent to react to big emotionally, how the tool is acceptance, okay? And also just taught you from the rationality side, from the technical side, how to trade this position. And now you made, as I made here, a one lot, as I told you. You may see here, this is how I played this position. And I played contract number 1 here. You see, this is my contract number 1. I show you where you would have ended with my description. You secured, excuse me, you secured your number 1 contract either here, and number 2 contract either here, or you secured number 2 here. I make it now the worst case, okay? Because I said I would stick on this, and after see this rejection, I would secure this. And your number 3 contracts you secured to this here. That means you made 6, 7 with the first. You made at least 2 contracts with the second, is 9. And now you made another 14. That means 23 ticks out of this play. And you can say now, yeah, well, that's totally easy. If you have in a total system, a technical system, and maybe, but normally it's not easy then to think how to behave on the market, how to handle it, how to say where's the realistic target area. And you see how they react to this area of 56, 57, so to this volume edge here, in the composite profile from the week, in the yesterday profile. I can show you here again. Now you can see it here. You see this volume edge here, 57, 58 here in yesterday's profile. That means where everything started. This was the next resistance area. You see now here created in the weekly profile here. You see how this high volume edge here appeared from the area from the less volume at the top from yesterday where the short started. So you see then how they react intraday, of course, to this area here at the 57. You see once they reached it, not only you were the guy. I hope that not the whole world is listening, because then they all secured their win and got out here. You see this here? That they got out here of the position. But you see, just that's normal. It's not, I'm not a magician. I'm just knowing some little bit techniques from volume profile, auction theory, just mixing everything together and say, okay, I'm trying to make some lucrative targets out of this information. All right, so I think we should give ourselves some little break now. It's not, of course, some little cognitive resources which you need to spend from your brain. And as Market Wonderful played already, then it's hypo number 3 and even the hypo number 1. Hypo number 1 was played in the pre-market. Then hypo 3 started in the pre-market, pulled back, and I gave you the next level. That means hypo 1, hypo 3, and again hypo 3 with the increasing buy volume at the top then from the cash market open. So wonderful. Everything again working out pretty good when you have some big picture preparation where you can refer to, where you can see it then micro picture in context. So you see, it's so important, and it's where I have my let's call it some kind of, at least some self-confidence in my trading, when I know I can rely on my big picture preparation. And you don't have to be the master super trader to develop your own good big picture preparation. Yeah, see, it's interesting. Still, most of the people, seems like they are in the DAX future. So don't get me wrong. I think the DAX future is a wonderful, volatile instrument to make in a short time period. A lot of ticks, but you always also have to see the risk, on the other side, and you have to be emotionally totally under control to make money. And so far, 95% of all the people I know, and I would say I may know around 100 to 200 people who trading the DAX, are losing money. And I think again, Bund is totally underestimated, in terms of learning your mindset and also controlling your risk, and also be able with a small account, or underrated, sorry, with a small account to stay in control and don't risk too much in terms of the size you can handle with your account. So yeah, I see. At least thank you to two people are watching, two people who wants to learn here with the Bund, which I think is much easier to. So yeah, thank you. All right. What is interesting? What is interesting so far? Well, I would say there is something interesting because, first of all, you see the curve a little bit flattened here from the delta. At the moment we're reaching the Besaid 57 level here. This is when they reacted to this level. You see this here when I told you this is important level, of course. The next important level is then the 65, 66 level, because this was the initiative stellar starting already from the pre-market edge, not from the overnight, what was the more, for me, more important. You remember where I took my short yesterday, but there was also some initiative selling. This is when I measured my stop wrong, you may remember yesterday, but at least this is the second level. So that means we see some reaction here as they reach the 57 here. They reach it here. They took some profits. Now they stay in the game. That means the little people that selling here, which wasn't super heavy, but you see they absorbed it. We stay in at the 53, and you see now they took on again to the high. That means there's still people interesting in even testing, getting to this initial selling level of 64, 65, 66. The first time they tried to take out this 57.9 again, they got rejected. You see this here in this candle, how they got rejected here from the sell side, and now we saw no more selling, at least at the low, but building value, shift of value still. See here, and now it means a lot of course, a lot of people traded here, and now they even tried it a second time, boom, and took out again the high. So that means no matter what happening, even we see here this sell rejection signs. We saw here, and we see still the buyers staying in control and interested and say, no, this is not fair yet. So now we have in the intraday, we have that what we saw, what I said today in the morning, that these two profiles from yesterday and today we have in the middle. In the middle we see some lack of volume, where the short trend got through this lower volume node or this lower volume areas. I can draw this here again from yesterday before the market today opened. When you look at this profile, you see here we have this lack of volume in between. So if they repair this and go into the bull side, then we see this got filled out and repaired step by step, and then till we got a normal distribution. So this is what they're doing then today, because if I draw now this volume more and more to the right, you need to look here when I draw it, how this is going, how this is filled out now step by step. See this? How this more and more is filled out. I will delete it, go back to the trading screen, and I will show you the next thing, of course. If you see this profile now, I will a little bit, so a little bit tighten it. And you can see now what we see here is, we see So now, I draw this now live so you can see it. What we now see here is that we have a bullish imbalance. That means we see that the value shifted and shifted and shifted more and more and more. They found a little bit acceptance, but still looking for the upside. We see then a bullish imbalance. And if we draw it to the upside, this streak here, you can put to the upside, and then you have a pending bull profile target. The pending bull profile target here, that means we may see testing even the areas of yesterday, pre-market and cash market distribution edge around that 75-80 area. So this is a possible target for if you go in measuring the skewers of a statistical graph. And the statistical graph is of course the normal distribution, which is normal, the ending product of a distribution when they find balance. And this will be the depending target here from the depending profile target here when we see this imbalance. And this is a bullish imbalance we have right now. Sorry for my English. It's of course not the pending balanced bull target. It is the um, the projected. Projection means, of course. Sorry, I'm German native speaking and stuff. So it's a projected. So that means where we expect that if it's gonna normal distribution where the balance will end then. So this is the PBT means, of course, the projected balance target. So that the projected level that gets the completion of a symmetrical, normal, D-shaped, balanced bell curve. All right, then now they hitting this area of high liquidity provider. So I think this is a good situation to see, to learn when you see this long term liquidity, and this liquidity is obviously in the books early after the cash open. That means this is real liquidity here in the book. And of course, this is then some barrier where they need to get through first. And when we say our balanced profile target is around the 75 area, 75, 76. And we know that this liquidity needs to be taken out first, and now we can see if it's still bull power in the game. So if it's there still bull power, and say no, fair price, normal distribution is not yet reached, but even here at the 70, 75, so that means if we can take out even 64, and remember there are 1,000, almost 1,200 contracts at the 64 level. Yeah, that's some little bit got taken out first. So you see then, if they really absorb this, we may see then some technical reactions. That means for short time scalper coming in, what I would never do here, as we are in a bullish market today, at least in this overall correction, where still some short players, of course, overall in control, but I wouldn't trade then this here. They traded it. They traded 1,200 contracts at this level. Almost exactly the number to take it out. So that means you see still initiative buying at the top area. And let's see, it's still a not so small probability that they reach in then this morning area from yesterday open low at the 178.73 to the distribution maximum 76 area. So that means then we would have a normal shaped distribution for the day, and they can find some balance and get into a balanced market. Now you see they really play a textbook like today, the long, back to the selling area where we started from. Remember again, there was the first initiative around the 60 65, 4, 5, 6 level here. Then they got back and we saw the second initiative selling here with the more important overnight low taken out with the 50, 53, 54, 56, 7 area, where we took our profit of our last contract today as we are in a correction mode. Now they see as market builds a more skewness to the upside, means a bullish imbalance today, and still initiative buying at the top. We're now hitting the area of yesterday open from yesterday Monday open range in between this area from 82 to the low to the 70 area. So that means market now testing these areas where we have seen where everything started, and now we see that the profile is getting more and more repaired. That means the bullish imbalance got repaired more and more. That means the pending bull, the projected balanced target area around the 70 area is more and more in reach. So then they can find balanced and market then typical, remember our time now, 10:30 around, and then they may fill it out. And in the long term, we see then, of course, what I showed you already before, that as before we started today, we see this lack of volume in this profile from yesterday and today. This is composite from 2 days, from today and yesterday. The last 3 days, sorry, so Friday's first trend is short day and the second. And you see now today, when I draw it to the right, you look at this area here where this lack of volume was created through the short trend down. You see now, watch this, how this is now getting repaired and more filled out. And at the end, if they find now here today the balance, repairing the bullish imbalance, what they do right now, and traded it, then we see that they fill out this area, and we have then repaired profile. So this is the way it works, and you can work with this as well as looking for target areas, looking then for the edges got taken out with volume to see where is then the target with the minor PSCs or low volume nodes, see then how they react there, see if there's responsive acting, means reaction, taking profits, getting out even more, or staying in the game, means building a wedge consolidation followed by initiative again here in this example at the top area. So this is quite something where you can reduce watching too many indicators, watching too many information levels, and this is very important then to give your game the next kick to get to the next level. And you can see now that they took on now more and more profits. I mean, the traders to got with this trade here, seeing now that with this double top kind of thing here, and with a delta divergence that means that didn't lead to the same bull power from this control level from here to here, from here to here. So from here to here, compared to this, it didn't lead to the same bull power. We see then people already getting out, getting out, getting out, getting out, push, boom, push it out. So now they try to find some balanced area already. Maybe then later they at the noon or whenever within the US session. So they have still all the time to get then and repair this area and get up here to the top area to this projected balanced target. So this may take some time. Nobody knows if price coming up, going down before pulling back to here or pulling back even to this level, balance then, trying to take out the high, make a new high, and get back to bullets again. Everything can happen, but just from the profile here we see this bullish imbalance, and normally there's a high chance that it got repaired, and it means if you're looking then for entries from the profile and maybe see that this edge got filled out first, this low volume node, and people may look here for getting into a long again, or if they like they do here, they even look here for this at the POC of the day to look to get into some longs. So this is a possible long entry around here when they're coming back and we see still ongoing buying. But for me, it would be the better sign if we now seeing that the market going in a balanced mood, and then we look here for the range edge, the lower side. So maybe around here, this 52 area, or the area around 47, or the area around 41 to 3. No matter what, we want to see balanced. And then you can look for a range long, and you then have a very good cheap entry for reaching again the POC or the top area. Or if you trade it maybe with two positions, you can say, well, okay, I keep this as a long range entry, but I know I also have the opportunity later in the day that they even reaching this yesterday areas of where everything started, the open, the yesterday high even. So because we have a target, a projected balanced target, when we see this bullish imbalance that at least leading to a price around 70, but even could go to 77. So you can go then and keep the second position. But first I would recommend to wait for some balanced market, and then we see for some range long entry to get in control of our risk. Yeah, beautiful so far. So you see the market now finding balance here at this area. It's not going too deep to the low of the day's distribution from the trend, which the separation here, even 51 not touched. It means the accumulation here at the POC took place. They absorbed it even here again. You see this here at this moment in delta absorption. It means this is now at the moment, range long level. This is accepted, and they may stay in this balance area. They may leave it to test the lower edge. They find balance again, testing, and then once they got out of this higher area, they may even test this whole higher area here from yesterday, this distribution edge from the open range, and this will be then our projected balance target. And right now it's 11 o'clock, so we're at the end of this morning session. I hope I could provide again some valuable informations for your trading, technical and the mindset side. And I thank you for watching again. A very, very interesting, another good day to learn. Also made some good profits today. And thanks for watching. See you then tomorrow. This is Anton Hopfel for Manapa Trading.